Hi, I'm Mike Capizzola from the Investing Channel, and welcome to IPGo, the show where we take a look at the IPO world, past, present, and future. Equity markets are still trying to find a firm footing and a sense of direction, and are not helped by energy prices that are spiraling higher, and which threaten to create a supply-side shock to the economy, akin to those caused by the oil price hikes of the 1970s that forced many Western nations into a prolonged period of stagflation. Wrangling on Capitol Hill about a permanent solution to the debt ceiling issue is also unnerving investors who see politicians ignoring the interests of their constituents, preferring instead to indulge in political point scoring 13 months ahead of the midterm elections. As we've noted in recent weeks, turmoil in the wider equity markets is not necessarily a bad thing for the IPO and new issues markets, which can be thought of as being uncorrelated to the secondary markets in listed equities. After all, in times of uncertainty, investors are often on the lookout for a fresh story or opportunities that have not previously been available and that aren't tarnished with the same brush as other investments. Sometimes, of course, markets just want more of the same, and investors have been getting excited at the prospect of two automotive IPOs in the shape of Rivian and Volvo. Rivian Automotive is backed by Amazon, of course, but it's still an early-stage business, and its IPO filing documents show that it's registered a near billion-dollar loss in the last 12 months. In keeping with other listings in the electric vehicle space, the company is looking for a sky-high valuation of $80 billion, which could be underpinned to some extent by an order for 100,000 last-mile delivery vehicles from the giant online retailer. The first 10,000 of which should be delivered this year, the balance being due in 2030. Indeed, Amazon will have exclusive rights to Rivian's vehicles. However, Amazon won't be embargoed from shopping elsewhere. Rivian has orders for a further 48,000 vehicles, such as SUVs and trucks. However, these are non-binding orders, and customers have only needed to place small deposits of $1,000 to support their order. Rivian, which employs 8,000 staff, is forecasting spending plans out to 2023 of $8 billion, but there are few details as yet about how the listing will be configured. The IPO is being led by Morgan Stanley, Goldman Sachs, and JP Morgan Chase. No doubt the bankers are sounding out potential investors before reporting back to the company. Swedish auto manufacturer Volvo, whose cars are renowned for their reliability and safety, is also planning an IPO. Volvo is owned by China's Geely, and Volvo will list on NASDAQ, but that's on NASDAQ Stockholm rather than in New York. The Chinese connections to the company are effectively blocking the route to a U.S. listing. It had previously been suggested that Volvo would spin out its all-electric brand Polestar via an IPO, but it now seems that the parent company will list. Volvo has committed to shifting its entire car range to fully electric models by 2030. Volvo will look to raise $2.90 billion from the listing and is aiming for a valuation of some $20 billion, a figure far lower than that sought by Rivian. In 2020, Volvo sold 661,000 cars, and in the first half of 2021, sales rose by 41% to 380,757 vehicles. That sums up the conundrum in the EV space, in that legacy auto manufacturers that are transitioning into EVs are valued at far lower multiples than new entrants. Another business that filed for IPO and caught the imagination of Wall Street is Rent the Runway, a fashion rental business that aims to provide professional women with a rotating wardrobe of high-end designer fashion. Renting items such as clothing and furnishings is something that does not seem alien to millennials and Gen Zers. However, the clothing rental market is pretty dependent on those potential customers working in an office environment rather than from home. Rent the Runway, which was founded in 2009, saw its revenues fall to $157.50 million in fiscal year 2020, down from $256.9 million a year earlier. That meant a bigger loss for the company of $171.10 million, up from $153.9 million in the prior period. Goldman Sachs, Morgan Stanley, and Barclays are leading the deal, but once again there are no details as yet about the size and pricing of the offering. Hair products group Olaplex Holdings Incorporated, which we highlighted last week, priced its IPO at $21 a share, $2 above the indicated range of $17 to $19. Olaplex raised $1.55 billion in the deal, which valued the business at $13.55 billion. The stock also popped higher on debut, reaching $26.50 on day one before settling at $24.50, and it has subsequently traded to fresh highs of $27.74. Trading volume in the stock exceeded 4 million shares per day in its first 4 days of trading. That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions.